Tasha Aquino had a lot to say about Tesla and the RoboTaxi business, and it was really interesting. So we'll dive a little bit into that and what future revenues could look like and how this will impact our economy. So let's get into it. Tasha Aquino, Director of Investment Analysis and Institutional Strategist at ARK, has made a bold prediction. In reality, she has always had this point of view, but now with Tesla's RoboTaxi reveal date coming in August, she's more confident than ever about the future of Tesla. ARK stated not too long ago their prediction for Tesla's share price by 2029, which is $2,600 for the expected value, $2,000 per share for the bear case, and $3,100 for ARK's bull case. Today we're talking about the potential catalyst behind this increase in value. So welcome to my channel where I give you the latest Tesla news.
90% of the value of Tesla could be attributed to RoboTaxis in 2029. This will totally transform the business model from essentially one-off vehicle sales with a little bit of software to a recurring revenue stream, and we think it'll have very attractive margins. Autonomous cars will not only change how you and I get around, they'll be so much safer, but they'll also be quite profitable to Tesla and very meaningful for shareholders.
So Tasha, by 2029, $2,600 a share, that's 4 years from now, from where we are now. I mean, a lot's going to have to happen, right? And I got to wonder, just in terms of scaling and also manufacturing, they had this new system that they, I think, tried to implement, right, which is more unibody, fewer parts, so faster, cheaper, etc. They've abandoned that, apparently. Is that going to affect rollout of robotaxis?
I think that the rollout of robotaxis is actually not dependent on the manufacturing of the next generation vehicle. I do think that the next generation vehicle will be used for the robotaxi platform, but they can turn their current fleet, Tesla's been saying this for a while, that they can turn their current fleet into robotaxis as well. They could take cars coming off of lease. They removed the option to purchase, for instance, the Model 3 off of lease for that reason. I think so that they can seed their robotaxi network.
Tesla might consider the broader implication for the global auto industry. Tasha Aquino explained ARK's latest analysis, which predicts Tesla's stock could soar to $2,600 by 2029. Aquino highlighted Tesla's plan to transform its entire fleet into robotaxis within the next 2 years. Tesla is poised to expand its robotaxi operations globally. Tasha Aquino attributes about 90% of Tesla's projected future value to robotaxis, transforming their business model from one-off sales to a more lucrative, recurring revenue stream with attractive margins. This will not only revolutionize transportation by enhancing safety, but also promise substantial profitability for Tesla and shareholders. Furthermore, Aquino clarified that the rollout of robotaxis is not contingent to the next generation vehicles. She actually pointed out that Tesla's plans to repurpose its existing fleet, including models coming off leases, to seed the robotaxi network potentially within the next 2 years. ARK's outlook for Tesla by 2029 is the prediction of $2,600 per share. Tasha also mentioned about how this disruption could significantly reduce costs and reshape urban infrastructure and even alter living spaces, potentially making garages obsolete. Now, this could also eliminate the need for auto insurance and maintenance repair for many. It also drastically alters the economic scenarios. Elon Musk highlighted C.invests research as one of the most precise and reliable sources regarding the future valuation of Tesla. He specifically pointed out the bullish scenario presented, which suggests that Tesla shares could soar to $3,100. This endorsement is significant as it reflects a strong alignment with ARK's vision of Tesla's growth potential. ARK's projections are rooted in the revolutionary impact of Tesla's RoboTaxi service. C.invests estimates about 60% probability that by 2025, Tesla will roll out their ride-sharing service and transform urban mobility and reducing the need for personal vehicle ownership, potentially dominating the ride-sharing market. And if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. And some might question the pace in which these innovations need to be rolled out to meet the 2029 target. In the near future, Tesla is poised to introduce its full self-driving software to a broader audience and unveil its RoboTaxi model, marking critical steps towards the future. All of this might seem ambitious. Tesla is laying the groundwork for a future dominated by autonomous service-based transportation. This strategy not only promises to revolutionize how we commute, but could also redefine the economic landscape of personal and public transportation. Claudia Aquino also shared insights on Tesla's potential revenue model with robotaxis, suggesting that Tesla could command a higher cut per mile than current rates offered by services like Uber, due to a more favorable cost structure and complete ownership of the network.
Picture this being a fleet sales model that could be the end consumer companies could pop up, and this could actually be a profitable business model, particularly for companies today that actually might have to change what they're doing if they're tied to the traditional gas-powered car ecosystem. That could be an option, or it could be a startup that owns and maintains these fleets. But ultimately, we picture Tesla taking a cut off of per mile revenue, much like Uber does today. But I actually think that they could take a higher cut than Uber does today, because one, the underlying cost structure is better, and then I think that if Tesla wholly owns and operates the network and is able to charge Uber and Lyft equivalent prices, again, especially in the early years, we think in the first 50% of all miles that will go to robotaxis, that is where all of the economics will be. So that's why it's so important to be early to scale here.
This could capitalize significantly during the initial phase, with 50% of all miles driven are expected to be through autonomous taxis. And despite the perception and all major efforts in autonomy in China, Tesla and Elon Musk have been consistently acknowledged as leader in this field. The potential for RoboTaxi service, its business model, by 2029 was highlighted. This is projected that the RoboTaxi business could represent 88% of Tesla's business, surpassing its current electric vehicle revenue. This shift could indicate a significant transformation into Tesla's business strategy, where autonomous driving could minimize traditional car sales by a substantial margin. And regarding the rollout of robotaxis, there is an optimistic outlook on the timeline, with a probability of substantial developments occurring within the next 2 years. This optimism extends with the possibility of collaboration with other automakers. Now, the consensus remains that if the technology delivers as promised, the financial metrics will follow. A transformative period for Tesla and the auto sector at large. Don't click away yet, because I want to share this video with Dan Ives on CNBC. He's leaving the reporters speechless. It's really cool. So let's watch it together.
Bush Securities Managing Director Dan Ives. Just like, we talk about these big pay packages, it's like $1 billion, and it really is that. But to the point, if RoboTaxi is the next big thing, do you think that this is the man who can lead Tesla to the future? And does RoboTaxi, is that the thing that's going to make Tesla regain its $1 trillion market cap?
Musk is Tesla, Tesla is Musk. And I think ultimately, right now, Tesla is the most undervalued AI play in the market. I believe the AI component of Tesla could be worth 1 to 2 trillion alone. And this, in my view, this is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, in my opinion, will be a historical day for Tesla.
Okay, they unveil it August 8th. Any idea when production starts, when we would actually see robotaxis on the road?
Look, I think over the next 18 months, I mean, this is something, we're not talking 3-4 years away. I think this is the start of what's going to be not just robo-taxis, but when you talk about full self-driving and autonomous, Tesla is an autonomous AI company. It does disruptive tech. And I think we will be looking at ultimately a stock that could potentially double over the next 12, 18 months.
We have a headline today from CNBC.com's Laura Kadalodny. According to internal memos, Tesla's workforce has shrunk by 14% since Elon Musk announced layoffs back in April. In December, Tesla employed a little more than 140,000 people worldwide. Today, it's 121,000. What do the layoffs mean to you in terms of resources aimed at growth and cost efficiency?
Yeah, well, they've had to rip the Band-Aid off because we've seen softer demand globally, especially in China. That's the hearts and lungs of the Tesla store. But I think they have been proactive. And even though we're not expecting fireworks for the June quarter, this will pay dividends. It's what Musk and Tesla have needed to do. An adult needed to be in the room, and Musk stepped up. And I believe right now, when we look at the Tesla story, they've gone through some Category 5 hurricane. But I think on the other side of this now is going to be that Cinderella story will return to Tesla. And I think AI is going to be the key.
You know, there was a lot of hype over Cybertruck when the launch happened, when it rolled out off of the production floor. Do you think expectations and the hype around Tesla itself make the rollout of RoboTaxi problematic?
I think you're going to have a brighter spotlight like we see with Musk and Tesla. But from a core technology perspective, I believe this is really going to be the start of what's going to be a renaissance of growth for Tesla, not just on autonomous, but even on a demand perspective.